Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Wednesday, July the 19th, 2017. Starting off with the gold miners, looking at the GDX. As you can see, the market is bumping up against resistance, and that is around the $22.30 range. Market is having trouble breaking through that resistance. So, in order to open the floodgates to much higher prices into next week, we're going to need a close above 22.30 this week. The good news is that on the daily momentum, we have a positive, which is good. As long as we stay above 22.02 this week, then we will carry momentum over into next week. So the daily momentum is looking good in the GDX. Market has managed to come off of its lows. We have a nice bounce here from this $21 level all the way to the 22.18 level, which is good. So we've been able to put an end to the last leg, which was back here. And now the market's really trying to get something going. But I think that at this stage, it just has so much ground to cover. We'll have to just keep watching, see how high it will go. But it's going to hit some more resistance up here around the 22.74 level, and that could be very, very difficult going forward. So we'll watch and see. But if we can manage to get up and out from below this Kumo cloud by the end of July, that'll be great, because then we're looking back into the $24 range. So that'll be the beginning of the new bull run. But as we have it right now, we're still very bearish, and the market is under pressure. As long as you're in this bearish position, all bull rallies are in jeopardy of being sold, just like back here. So as we're building this, and this is the first bar, is going to be very telling within the next 2 weeks if the recovery can stay alive. So that's what we're watching in the GDX. Looking at the GDXJ, GDXJ has found itself inside of the Kumo cloud. All right, so GDXJ is showing that it has a little bit more positivity in it, even though you're in the Kumo cloud of death and not below the Kumo cloud, which would be super bearish. This one has a little bit more hope. So will the juniors lead the way? It's a good possibility. We'll see if this market can get top side of the cloud and form a base around the $34 handle and get it back up to 36. So this one's going to be interesting also within the next couple of weeks to see if it breaks to the bottom side of the cloud, or if it gets enough energy going and breaks top side of the cloud. Right now, it's running the risk in the next 3 weeks. If it's not top side the Kumo cloud by then, it's going to find itself down here. And then as we go further out, rallies will be easily sold at that point. And so then it'll be in jeopardy of getting back down to the low $31 handle. And that's the GDXJ. Looking at the silver miners, SIL, you see that it is also trading below the Kumo cloud and having a problem with the long-term resistance at 34.26. Now it is trading near the daily momentum and needs a close above 33.61 to carry over any bullishness into next week. So that's where we are right now, and the silver miners right now. So they're in jeopardy of hitting resistance and having a problem. Prices are already starting to retreat from that resistance high. Looking at the junior silver miners, SILJ, a little bit better off, managed to get above the long-term trend line resistance and building support now, but having a problem with the bottom of the Kumo cloud at we'll say $12.50 level, having problems there. If it can't break top side of the cloud from here, then it's going to run jeopardy of pulling back. And we're looking at possibly getting back to around the back below 12 bucks as we get further out. So this one is also in danger of having this rally sold as well. So that's the junior silver miners. All right, taking a look at GLD. As you see here, GLD is also banging around resistance, which is at 118.26. And right now we need a close above 117.43, and that'll carry over some bullishness into next week. If we cannot get that close this week, then it's going to open the floodgates to this retracement rally being sold. It should also be noted that we have some gaps to be contended with, and that's back down in here. All right, so the gap that was made from July the 14th is going to have to be reconciled at some point. And the way I'm seeing it is going to be rather sooner rather than later. So this one's still under a lot of bearishness right now. This bear trend is still pretty powerful, even though momentum turned up on some profit taking these last few trading sessions. It still has not changed the overall complexion of this particular market. Looking at the SLV. All right, SLV a little bit different. Still has more room to run top side, trying to make it to $15.74. And then from there, we got the air pocket up to the bottom of the Kumo cloud at $16.16. And again, it's been such a long-term bear cycle right now that all rallies look to be sold at this point. We haven't seen the bears come in and pounce just yet, but from here to here, we will, I'm sure, start to see some selling creeping in and picking up. So this is an interesting spot to be in as well. All right, switching over to the future side. Looking at gold, we'll start off with gold. Gold did manage to do a little bit of retracement. Now, we did have a sell-off earlier in the session, only to recover going into the close. However, the market's still having problem with the trend line resistance at 1243.60. A close above 1243.60 would open up more bullishness into next week, and then gold has a strong possibility of getting topside the Kumo cloud, which would be north of 1260. So that is a strong possibility going forward. However, all bets are off if the market cannot close above 1232.30 this week. Looking at the silver futures. All right, silver futures right now trying to build a support around $16.16. Wants to make a run at least 50 cents from here, somewhere north of 1661 trendline resistance. We get up to the bottom of the Kumo cloud at $17.16. So this is going to be an interesting one to watch too. Also dangerously close to giving up momentum. Needs a close above 1613. This week has to do it in order to have some kind of bullishness carry over into next week. All right. Natural gas. Warm weather is helping the natural gas. As you can see, though, it's getting dangerously close to bumping its head at the bottom of this Kumo cloud. That could put some further pressure on prices and see prices once again retest that $3 mark. We're only 6 cents away from that right now. We do have support at $3 even. Prices are going to have to be able to maintain that, or you lose all momentum going into next week, and then we could revisit the low points south of $2.85 and the natural gas. All right, moving along, taking a look now let's take a look at what's been happening in the NASDAQ 100. NASDAQ 100 was able to do something that it hasn't been able to do in a very long time, and that's to close at this new high, above this 5,900 level. 5,900 is a key level for the NASDAQ 100 for several reasons. One of which is, keep in mind that this is now 900 points away from the previous old high of 5,000. We're now at 5,919. So we've bested that level by 919 points, which is pretty massive. All right, so technically speaking, you have 919 points to play with now. So that means the market can sustain a catastrophic pullback, and as long as it stays above 5,000, the market is still parabolic. So this is very interesting times that we're in the stock market, especially in the NASDAQ 100. So it maintained a close of better than 59 even. We hit 59.25 on the intraday high. And as we are doing the video, the Thursday markets have opened. All right, so now we're trading and we're at 59.18, down a quarter point. So you can see super bullishness is here. All the market needs to do is close above 58.68.5 for the week to carry over more of this bullishness into next week. And we have 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. 9 up days in a row. All right, and that's where we are in this NASDAQ. So you know the corrective thing is coming. Check out the consolidative nature of the last correction. Very odd. You have a down bar, then an up bar, then a down bar, then an up bar, then a down bar, then an up bar, then a down bar, then an up bar. This is pretty ridiculous. So you could set your watch. You know, if you were down today, you'd be up tomorrow. If you're up tomorrow, then you'll be down the next day. And this went on for several days in a row. And then finally, it just went all green. Quite amazing, isn't it? And even going back here, you saw it. Up, down, up, down, up, down. Just amazing, these reoccurring price patterns that come. So, and then we extended this out to the several day run. We broke it, and then we locked it back into several day run again. So on the next correction, all things being equal, we should see that again. We should see closer to a 200-point correction, which will bring us down to the somewhere close to the 5,700 level. So this one is definitely something to watch. Now, there's nothing bearish on the screen. All right, not suggesting a top or anything of that nature. Just saying that all things being equal, if we were to correct here, you're looking at a 200-point correction. So it's just something to keep in the back of your minds. All right, let's take a look now at the crypto space, looking at GBTC. On the GBTC, we had this amazing down spike here. All right, amazing price action on this one, only to recover. So this pointer suggests further corrective price action on the way in the crypto space, whether it's immediate or we run into some new highs first, but eventually the pointer is going to have to be dealt with. So we're at a unique crossroads in the crypto space. Not to mention, we got the August 1st fork coming. So much is going on in this space, it's not even funny. But all things being equal, we know that further correction is coming. Now, we did already have a huge pullback, and the market managed to recover. However, it doesn't necessarily mean that we're out of the woods yet on further corrective pullbacks. Looking at the BTSC, we see a similar pattern. Now, we don't have the pointer, but we have still a bearish pattern here. Taking a look at NVIDIA, we see quite the opposite. It's really holding its own here. All right. Still super bullish on the NVIDIA. AMD, though, seems to be struggling. It is not as powerful a market as the NVIDIA. So this one is interesting. But you do have ramps coming up in both of these. So it's looking very interesting, to say the least. All right, looking at crude oil right now. Crude oil bumping its head at the bottom of the Kumo cloud. As the time goes on, the next few trading sessions, the pressure should build and we should get back down maybe south of $45.86. So you're looking at a $2 correction getting ready to happen, possibly in this crude oil, especially if the market cannot maintain a close this week above $46.67. All right, looking at the bonds to finish things out. Got north of the Kumo cloud now, it's broken out. And we have a ramp, and we have a good, strong daily momentum. Market just needs to maintain 153.13 close for the week, and the market should be right on time. This is happening right on time for the ramp, the upcoming ramps on the Kumo clouds. If this does get on and popping, it will make it more difficult to raise rates without immediate ramifications. All right, so 154 is where this is really going to need to get to and maintain closes above 154. That opens the door to, by the end of the year, possibly getting back up topside the 157 mark. All right, so with that being said, remember, pulsewavetrading.com. Come educate yourself, learn how to take advantage of algorithmic trading, because all of the markets are prone to the forces of the algos. Learn how to put the force of the algos at your disposal. Learn what the central banks don't want you to know. Pulsewavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.